So I just want to address, I think this question, from the global, outside of the US, I think people are looking at this as, as it is. It's a political theater with disastrous economic consequences. According to the White House Council of Economic Advisors, if we enter this protracted default scenario, that this is going to cost the US 8 million jobs and half of the stock market value. And even if there is a last-minute deal in the so-called brinkmanship scenario, that is still going to cost 200,000 jobs in the US. That's worth a month's job gain. So the economic consequences are really serious, and that definitely have the global ramifications, right? So there are many central banks are holding the U.S. Treasuries in their foreign exchange reserves. Those bond securities could lose a lot of values. Not to mention the entire global financial markets are going to be affected, because the treasuries are held as collaterals in many of these financial systems. Not to mention, the real consequences, which is, if the U.S. goes into a deep recession, this is definitely going to hurt the rest of the world. Now, I think one thing needs to be clarified is lifting this debt ceiling does not authorize any new spending. And in fact, it just allows the U.S. to finance the existing, obligations. It just allows the U.S. to pay the bills that have already been incurred. So I think from the rest of the world, this is really a true test of the U.S.'s political system if there is a deal to be done quickly and efficiently.